TIAA CREF, one of the largest retirement solutions providers out there with plenty of plan participants. And you may be one of those that are a little confused about your benefits. So today I'll be walking you through some of the things that you should be aware of to make things simpler. Get the pen and paper out. So let's go ahead and say, what is TIAA CREF? TIAA CREF is going to stand for Teachers Insurance Annuity Association College Retirement Equities Fund. It's a mouthful, and they rebranded it to just TIAA because way back in the day, Andrew Carnegie started this back in the early 1900s, I believe. And then came the insurance part of it that allowed you to basically take your money, give it to CREF, and they would invest it for you in an annuity, right? That's the subject of another podcast. We'll talk about annuities later. But that's how that big gargantuan organization that now manages over $1 trillion assets with millions of plan participants, both active and retirement, kind of spanning, education, medicine, research, government entities, and that nature. So they're a huge player in the market. Just about anything you need for retirement solutions, they should be able to do. There's probably going to be basically 3 options that you have. And this is kind of falls into the section of what's in it for me, Dominique. When you're thinking about how you can direct your funds, right? So you're going to take, some of your salary, you're going to be putting it towards retirement, right? And TIAA CREF, or let's just call them TIAA. TIA. So TIA will allow you to, this is my own acronym, by the way. TIA will allow you to do it, let's say one of 3 ways. The first is the traditional self-directed 401k and or 403b, right? You're going to take that salary deferral, it's going to accumulate in an account, you're going to pick from a menu of funds, and it's pretty much do it yourself. You're going to get the returns of whatever you chose. They also have like a hybrid option that's kind of do it yourself, kind of on the manager, which is you pick a target date fund and you're going to retire in 2050. You put all your money in the 2050 fund and you just let them do it, right? And then the last option is what I would call the annuity option, right? So this is when you can do a tax sheltered annuity and you basically give your money like the CREF option earlier that I talked about. And they will invest it over time and you're going to get a fixed amount no matter what the market does. And that comes in a couple of different flavors, whether it be a fixed annuity or a variable annuity. Looks like I'm definitely gonna have to do a video on annuities because I keep on mentioning that term. And so there's really 3 options and they're not mutually exclusive. You can combine them depending on what you need, which I would always say your best bet's gonna get to be in front of a professional that can give you an objective opinion and craft a plan for you, even if you're inside a retirement plan like TIA. So let's jump into a video that I found on YouTube about some of their rebranding, let's call it. And I'll point out some things that look important there. And I'll also point out some things on their website that I think you should pay attention to and possibly want to think about when you're crafting your retirement plan. Let's go.
Your account statement plays an important role. So we've enhanced it with you in mind. Now it's easier to use your statement as a planning tool for your retirement savings.
Okay, so let's just kind of talk about this for just a second. This is a pretty standard account statement. Brokers, custodians, services like this, the financial services industry has a minimum that you send out statements quarterly. I would definitely advise you logging onto your account more than quarterly. And just what your ending balance is and what the rate of return is. All those things are kind of up for negotiation about what is put on those reports. But I would say this is, kind of standard at a bare minimum type of things when it comes to what is called KYC or know your customer or know your client requirements developed by the industry.
You told us what's most important, how much you have, and how your portfolio is performing. You'll find this right up front before diving into the details. Take a quick look to see how your retirement income might change if you...
So this is just the result of a calculator so that you won't have to do the work, letting you know the scalability of what your increases may do to your retirement fund. Obviously, it's kind of based on probably historical rates of the funds that you've chosen. You probably always just want to run that past someone. These are projections and should not at all be used as the concrete pouring the cement for your retirement planning.
Looking further into your account information, you'll still see how your portfolio is allocated.
Okay, so what you see here, and this is probably going to be my last comment, is those three ways that I showed you earlier, right? So the guaranteed would be the last way. That'd be that TSA or the annuity option. The equities, that would be probably, I would say, the mutual fund option that I gave you as number one, and then the multi-asset class is probably going to be that target date fund. So as you can see, they're not mutually exclusive. You can use all of those in your retirement plan. I can give you some pointers on whether they're a little high on the mutual fund side, and then what I'll do is I'll also link a video on how to kind of pick mutual funds, at least from some broad 30,000 foot parameters here. So, okay. So one thing to say about this, and it looks like you can even put your plan number in there, so that's kind of cool. And Morningstar is an independent service that rates mutual funds, so you can, looks like they consolidate the information here for you, which is great. But I would say this, there's 20 plus mutual funds here. Your plan probably does not have all of them, which is pretty normal, and that's okay. There's going to be a subset of that, and you can always just kind of look through here. I'll say mutual funds that are in this range of fees, expense ratios are pretty high, but maybe the performance warrants that. So what you would want to do is take something like this TIIRX that I have highlighted here, and you would want to see what is the benchmark? What are they comparing this fund? What is the manager trying to achieve as far as the objective of this fund? And let's see, you usually get this out of the prospectus. Let's see if they do it in the fund facts. Yes, they're trying to mirror the S&P. So you can easily see this amongst its peers. You don't have much to choose from because you're captive to this plan, but mutual fund picking 101 would be, okay, you're trying to mirror the S&P 500 index. What did the S&P 500 index do last year, 3 years ago, 5 years? What are those track records? Then compare the mutual fund's track record to it, and you can kind of see whether or not it's doing a good job. And you can basically look at the return of an ETF or an index fund has as compared to this mutual fund to see if the fees are worth it or are justifiable. That's been an overview of TIAA CREF, or TIA as I've called them in this video. Leave a comment below if you have any questions. I'll get to that as soon as I can. I might even do a video on it. Subscribe to the channel if you want more personal development, financial literacy, and economic empowerment topics. We'll talk to you later.